Good evening, one and all. I'm Abhijit Chavan from Kotak Securities Commodity Research Desk. I welcome you all to this educational webinar on trading commodities with technical indicators with me. Okay, so what will we learn from this webinar? Four major topics that we are going to cover today. First is different types of indicators. Second is why to use indicators. Third is how to choose indicators for trading. And the last one is how to trade commodities using combination of indicators. So starting with the first topic, different types of indicators. So indicators are majorly divided into two categories, leading indicators and lagging indicators. So what are those? We will find out now. So starting with leading indicators, those types of indicators are designed in order to anticipate further price movements to give the trade an edge in trading. Leading indicators provide early signal of entry or exit and allow more opportunities to trade. They indicate price momentum over a number of periods, which is used to calculate the indicator. So there are many leading indicators, but the four example which we have here is relative strength index (RSI), stochastic oscillator, William percentage R, and commodity channel index, that is CCI. So those are the leading indicators. The second type of indicators is lagging indicators. Now, what are lagging indicators? Lagging indicators provides delayed data, which means it gives a signal once the price movement has already completed and move is about to end. These indicators are widely used by traders as they don't show any upcoming price moves but confirm the trend of ongoing trend. So basically, lagging indicators are used for trend identification, whether the underlying security or commodity is in an uptrend or it is in a downtrend. So basically, lagging indicators are used to find the direction of the underlying security. This indicator gives trader more confidence rather than providing a specific trigger for entering the market. They give idea about the behavior of price movement. Some of the well-known lagging indicators are moving averages, MACD, that is moving average divergence, super trend, and Bollinger Bands. If you notice, these are the first of all, these are the major four lagging indicators. There are many other lagging indicators in the market as well, but if you see, all four of them have moving averages in their calculations. Moving average convergence divergence have combination of two moving averages. Super trend is also calculated, based on moving averages. For Bollinger Bands, also the mid Bollinger Band is 20 SMA, that is simple moving average, daily simple moving average. So basically, lagging indicators consist of moving averages, and generally those are used for identifying the trend of an underlying security. Whereas the leading indicators, they are generally used for overbought and oversold situations, where if underlying securities if is in a very overbought zone, then you can look for selling opportunities where where the underlying security might correct from the overbought zone, and conversely from the oversold zone you can start looking for a buying signal in the underlying securities. Okay, now why use indicators? Indicators are used for three main purposes: to identify direction, to confirm, and to time the trade. I'm not to time your entering or exit of your trade. So an indicator can use to confirm the trend direction and momentum of the market. If momentum is waning, it's going to be a sign to observe for an opportunity of support. Uh, okay, now first of all, first it can be used for a direction. Let's say, if security is trading continuously about 20 SMA or 50 SMA, we can assume that the ongoing trend is bullish as far as the underlying security or commodity is trading above specific moving averages. But apart from that, it can also be used whether the momentum is fading out. Let's say price is making newer highs and higher highs and higher lows, but on the same time the oscillator is in a downward direction. Let's say for an RSI, it's moving downside, let's say from 60 to 50. So in that case, we can assume that the momentum or the strength of the ongoing uptrend is weakening, and in such scenarios we might look for a selling opportunities. The second, indicators can be used to in conjunction with other technical analysis. If there is a breakout on the chart, we should look for confirmation from the moving average crossover. Now, apart from using indicators, if we study the price patterns and if you are trading into on the breakouts of traditional patterns, then indicators can help us to confirm those patterns. So let's say if there is a inverse head and shoulder breakout, so which is a bullish, you can take a buy trade for the inverse head and shoulders breakout. But along with the pattern breakout, if we also use indicators like a volume indicator which shows the strength in the breakout, then if we also look at the moving averages, which can help us to find out the ongoing trend. So if it is along with the ongoing buying trend, if it is about some let's say 20 or 50 SMA, then the trade setup becomes more powerful. I mean, we have lot of possibilities, or maximum probability to get the trade would be in our profit, or trade would be as per the direction of the pattern. So indicators could help us also to confirm the traditional patterns. According to some investors, trading is all about timing, where to buy, possible stop loss, and target levels. So even if the ongoing, let's say for example, even if the ongoing trend is bullish, I mean the underlying security or commodity is above the moving averages, but still you cannot just go and take a buy position. You need to time your entry points for the buying. So in such scenarios, if an ongoing trend is bullish, and let's say there is a temporary dip or correction, and let's say one of your oscillator is indicating you oversold indication, so that is a very good entry point for taking a buy position. So because overall the ongoing trend is buy, and the oscillator is indicating us oversold position. So you can time your trade as per the indicator and combination with the moving averages, take a buy trade in such trade setup. This is just one of the example how you can use combination of like moving averages and oscillators, or different types of this thing combination of indicators to timing your trade setup. Now, how to choose indicators for trading? uh, See, avoiding redundancy, sorry. Multicollinearity is a statistical term that refers to the multiple counting of the same information. This is a common problem in technical analysis that occurs when the same types of indicators are applied to one chart. Now, let's say what happens is, there are, since there are multiple number of indicators which you can use. But if you are, basically, which I explained you earlier, if you are going to categorize them under the lagging and leading indicators, you can use one of each of the categories. But let's say if you're using two indicators which are in the leading section, let's say you're using RSI and you are also using stochastic. So that could be a little bit confusing, because it's not that you cannot trade on two leading indicators, but majorly there is a possibility that since both comes under leading indicator category, both might give you the same kind of indications. So you should usually use different types of indicators, which could give you different types of signals. So to avoid the problem associated with the multicollinearity, traders should select indicators that work well with or complement each other without providing redundant results, kind of a similar results. This can be achieved by applying different types of indicators to a chart. A trader could use one leading indicator, which is a momentum indicator, or one momentum indicator, and one lagging indicator, or one trend indicator, which gives you idea about the ongoing trend. So there can be actually many combinations of leading and lagging indicators, pairs which can be used. Today, majorly we will discuss MACD and RSI pair and how to use them on chart. So MACD, as I explained you earlier, it is a moving average convergence divergence. It's a combination of moving averages. And RSI is an oscillator which comes under the leading indicator category, which is the relative strength index, which calculates the relative strength index of the underlying security. So before that, you can use multiple combination, one leading, one lagging, or let's say two leading, one lagging indicator, or two lagging indicators, one leading indicator. It is up to you. I mean, which suits you better. But you need to backtest a combination of indicators before taking actual trade. To start the actual trading. So, starting with MACD and RSI strategy. So, how we are going to take a buy signal and how we are going to take a sell signal. So, for buy entry, the condition is RSI, and please note that we have kept all the standard values of the indicators. We have not changed it, but yes, you can change it. For a short, you can the period you can make it shorter, so that you can have more frequent signals. And now this is as per the standard periods that these indicators have. You can use them. I mean, we have used them for our example. So condition one. Now these are two. This is MACD and RSI combination strategy that you're going to check or to see. So condition one is RSI 14 and 3 is the standard value. The RSI should be crossing below 30. I'm sorry, it's above 30 from the oversold zone. That is from below 30. So it should be below 30 first, and it should be crossing below 30 to above 30. So from oversold zone, it should be coming up and it should be crossing 30. So this is the first condition of RSI that should be met. Second condition for taking a buy signal is MACD line crosses above the signal line. So MACD line, if it crosses, from below, it crosses above the signal line, that's a buy signal, or that's a positive signal. So we should be having both of these signals, only after which we can take a buy position. Similarly, for taking a short or sell position, RSI should be crossing below 70 from the oversold zone. That is, from above 70, it should be coming down. It should be cutting below the 70 line. Along with that, MACD line should be crossing below the signal line. So from it should be previously it should be above the signal line, but once from the above it cuts and goes below the signal line, we have a sell signal. So for both the condition for sell, if it matches, we can take a short or sell signal. Now we can see this through an example. Okay, now we see here as this is a gold chart that you are seeing here. Now, first we see we have a sell signal. Okay, and if you see below, the RSI has first given us a, there is a small red circle, the first red circle near on the RSI indicator, which is, below the chart. So first the RSI signal cuts the 70 line. From oversold zone it comes down, so we have the first signal, and then later after two candles we have a MACD signal which crosses from above. The MACD lines crosses the signal line below it. It cuts below the signal line, so we can take a sell, where we have indicated this through an arrow. We can take a sell position, and you can see the previous swing high. Yeah, and this is a 15 minutes chart. So for now, this is for intraday setup. If you're doing intraday trades, you can consider 5 minutes chart, or you can take a 15 minutes chart for intraday trading. So now this is a 15 minute chart that we are seeing in front of us. And if we see that the stop loss, the swing high, two candles before where we got the sell signal, you can keep that as a stop loss. And target, you can keep two targets, 1:1 and 1:2. So you can, once the 1:1 target is met, you can tail your stop losses to the cost, and you can wait for the second target. Now in this first case or first scenario where we have got the sell signal, we can see that after it still moved up a little bit after giving us a sell signal, but it did not moved up the previous swing high, and then it fell down, and almost more than 1:2 it gave the movement. So both of the targets would have been achieved if we would have taken a sell signal over here. So second signal, the second trade we see, first again, we see a small green circle near RSI. So we see that first the RSI given us a buy signal from below 70. The RSI moved up and it crossed above, 30. Below 30, it crossed above 30. So first signal we got RSI as a buy, and just two candles after that, we see the MACD line cuts its signal lines and moves above the signal line. So where we have both the confirmation from MACD as well as from the RSI. Now you see the buy arrow, the first buy signal where we get. Okay, now in this case, you can keep the previous, three candles before the lowest, low of the last four candles, or let's say the previous swing low. You can keep that as your stop loss, and you can keep your target as 1:1 and 1:2. Now, in this case, we see that we have not got 1:2 as a target, but yes, certainly 1:1 target was achieved. We could have trailed our stop losses, and we could have, booked profit at 1:1 risk reward ratio. But here's one more thing. Rather than after a move, the gold actually became sideways after a while. So in this case, what you can do is you can again wait for either MACD or RSI to give you exit signal. Now in this case, if we see MACD, when the gold was trading sideways, MACD actually cut below its signal line. So now, which is something where we could have taken an exit rather than waiting for the our trade stops to be hit. So we can also use indicators to exit our positions if it is in profit. Now let's say it was above our costing price and we would have booked 1:1. But rather than waiting for the second target, if the indicator is giving us indication that the momentum might be fading away, and so it's better to exit the position, then in this case we could have exited the position once the MACD line cuts below its signal line. Again, if we see on the same chart, the third signal we got was a buy signal. Now here we see RSI again first given us the buy signal, and 2-3 candles after that MACD has also given us a buy signal. It cuts below from its signal line above the signal line. One more thing to be noticed here is that apart from the signal, you can also see RSI to identify the momentum is getting faded away. Now let's say for the first signal where we got the sell signal, just before the RSI, where we see the first red circle on the RSI, if we see on the chart, gold has made a new high, okay, new swing high where we got the signal actually, but the RSI has actually coming down and it has made a new low. So which is kind of a negative divergence. So what does it imply is that prices, as I mentioned you earlier, that price underlying gold prices was making new high, but RSI was not able to make a new high. In fact, it was coming down, so which indicates the momentum is fading away. So this was actually a cautious signal where we could have started looking for a sell signal. And after that, RSI given us a sell signal, and MACD also gave us a sell signal confirming the short position. So we took a sell signal over here. Similarly, if we look on the second signal where we got a buy signal, we can also see that prices had made a new low. I mean the lowest low if you see, and just before four candles that you if you see, actually prices had made new low, but RSI did not made a new low. So it could indicate that the selling momentum is fading away, and prices might reverse or turn around from current low. And same thing happened again. RSI first gave us a buy signal, and then it was confirmed by the MACD signal. And then we could have taken a buy position after both the indicators have given a buy signal. So the third signal again, it was a buy signal, but as per the stop loss, it might not have given us 1:2, but just 1:1. And after booking our 1:1 profit, if we see the MACD, where it again cuts below the signal line, we could have exited our uh, buy position, or we could have booked our total position over there. So one can have different combination of indicators for trade setup. Now this was just one of the example, like MACD and RSI. Similarly, you can also use super trend and RSI. Since I mentioned super trend is also the combination of moving averages that has been used. So super trend and RSI is something which you can try to test yourself and use. Those are also working good. Apart from that, you can also use moving averages and stochastic. I mean, you can use combination of two moving averages. Let's say, for example, for intraday setup, you can use 9 and 18, or you can use 20 and 50. And along with that, you can use stochastic also to see the overbought and oversold zone. But yeah, one needs to backtest and see what works for him or her, before actual trading, taking actual trades in the market. Also, similarly, this example was shown only for the 15-minute chart. As I mentioned earlier, that for intraday trade setups, you can consider 5 minutes and 15 minutes time frame for generating your buy and sell signals. But if you're taking a swing trading, then you can consider hourly chart, like 60-minute charts, and 2 hourly charts. So you can use those time frames to taking a swing trade. And if you're taking a very long positions, then you can also consider using those trade setup on a daily charts. I mean, you can see the overall daily chart just to get an idea what overall trend is as per the daily chart when you're taking a positional trade. And then you can look at the 60 minutes time frame for timing your entry or exit of your trades when you're doing a positional or a swing trading. But for intraday setups, I would suggest you can go for a 5 minutes and 15 minutes charts time frame. Okay, the information disclosure is for study purposes only. It does not constitute trading advice. It cannot replace professional trading advice. We therefore recommend that you contact your personal financial advisor before carrying on specific transactions. So that's all. I mean, from my side, if you have any questions, we can, I can answer your questions if you have anything related to this. Yeah. MACD setting, please. Okay, now see, as I mentioned earlier, all the indicators that we have used, we have taken the standard settings for all the indicators. So as per also for RSI, we have taken the 14 and 30, and for the MACD, the standard setting is 9, 12, and 26, which is the standard MACD settings which you can use. Yes, you can modify MACD settings and RSI settings, but then again you have to use multiple combinations, and then you have to check whether it is working for you not on the different time frames. But for what I have used the standard settings, and the standard settings for MACD is 9, 12, and 26. Everything looks good, but implementation is difficult. That is correct, because see, you have to actually do a very back test first. How does it work for you? What kind of security you are trading with? Commodities generally are volatile actually, so you need to trade cautiously. So you need to first back test yourself what kind of combination of indicators that's going to work for you, and then you can start using those. Can we use this strategy in 1 minute time frame? Yes, you can use, but also please make sure that if you are lowering your time frame to 1 minute, then you might also get false signals. There might be multiple whipsaws. So, but yeah, one more thing, that you will get multiple buy and sell signals. I mean, you will get more frequent buy and sell signals compared to the 15-minute chart. But again, the whipsaws would be also more in 1 minute time frame. So for intraday trading, you can go with 5 minutes and 15-minute charts. Is there any difference between commodity and stocks trading for using MACD and RSI? No, there is not such difference as such. I mean, whatever underlying security, it can be commodity, it can be currency, it can be stock. You can use any of those. But again, there might be a possibility that for certain stocks, some indicators might not work that well, and some might work well with the commodities. So you have to first backtest yourself the combination of indicators. You can start with this MACD and RSI for the stocks as well, and if it works, it's good for you. You can start using that. Can we use buy swing in natural gas? See, you can use swing trading in any of the commodities, not specifically for natural gas. But yes, if you need to identify the trend first, and then you can use the combination of indicators to take the trend eventually. And you can also look for the patterns that are forming for the longer period of times when you are taking a positional trades, because positional trades generally are recommended not just to take based on the indicators, but rather also if any traditional patterns like triangle, head and shoulders, inverse head and shoulders are forming, then the trade the possibility of going according to the pattern is higher. Is this indicator only for gold? No, as I mentioned earlier, this can be used on any commodities. You can use it on silver, crude oil, natural gas, any of the base metals as well. Entry candle timing. See, when you get the signal, you can wait. Let's say, for example, you are using a 5 minutes time frame. And let's say you are getting both of the signal, RSI and MACD, you can wait for the candle to close. Once it is closed, you can take a buy position, and you can keep the stop loss as I've mentioned earlier. Risk to reward ratio, see, you can always keep 1:2 as your risk to reward ratio, so that your even if you have multiple stop losses, even let's say out of four you have out of five you're having three stop losses and two winning trades, then still you are be in a winning situation if you're going to use 1:2 as your risk reward ratio. How well Bollinger Bands indicator perform in the commodities market? Yes, it performs well, but majorly Bollinger Bands are used. I mean, they works well in a sideways market because they actually. I mean, it depends how you use it. I mean, it can be used in both ways. It can be used in directional markets also, and it can be used in a sideways markets also. So there are different types of trading setups for Bollinger Bands actually, which we can use. But yes, it works well with commodities market as well, but it's a whole different topic. I mean, even you can just use Bollinger Bands and take a trade setup in commodities. So I think we are done with the questions. That's all from my side. And further, you can join us on our Telegram channel, commodity Telegram channel, where you could get the trading recommendation, news, and updates regarding the commodities market.